All right. Welcome officially to today's webinar. Great to have you. Those of you who were here before we officially started, I appreciate all the effort making sure our technology was working. Welcome officially to today's webinar. It is titled The Options JumpStarter. Helps if I could speak, right? The Options JumpStarter, a beginner's guide to profitable options trading. And I'm really excited about this webinar. I love teaching this. And I'm just excited because I know that the information here can really help you take your investing up another level, 2 levels, 3 levels. It'll really help you out. So I'm gonna show you exactly what you need to know to start using options. Right? It is a beginner's guide to profitable options trading. So if you're new to options, this is perfect. Even if you're kind of just, if you haven't used them or you're just thinking about getting to use them, or you've been using them and you haven't been successful, you're in the perfect spot. One of the things that why we feel today's webinar is so important is because of this statement. Until you know how to use options correctly, your portfolio will never achieve its full potential. That's why today's webinar is extremely important. It's like, you might be doing all right. You could still do well without options, right? You could still make money in the market, grow your account. But once you learn how to use options, it's like taking that I think they call it a governor off of a car, and you could actually go into another gear. You're able to see bigger gains than you were able to before. And my promise to you today is that in this webinar, you will see how you could use options the right way to make money in both up and down markets to help double your annual returns. I'm going to show you that today. In fact, it's not just me here today. You might have, if you were here before our official start time, you heard Jim Penna, and you're going to hear him again in just a minute. I'm on the left-hand side in the red shirt, not in the black and white. Next to me is my wife, but I'm in the red shirt. My name is Brian D'Amico. I'm next to, the photo next to me is Jim Penna. He is our manager of retirement services here at VectorVest. And he uses options quite a bit with his retirees. So this options is not just something that just like aggressive people do or gamblers do and risky people do. Jim uses options quite a bit with retirees. And in fact, instead of me talking all about him, Jim, you're there in the background. How you doing, Jim?
I'm good, Brian. Thanks for having me. Thanks to everyone for taking the time to be here, and looking forward to some great information. Thanks, Brian.
You're welcome. And Jim, you'll notice it. Well, once you get to know Jim a little bit more. By the way, Jim will be in the background answering questions. He's a great resource, but he uses options quite a bit for protection, for leverage, for income, all things, even with retirees. So you're learning to use options is an important part of what you need to do to, like I said, take your trading to another level. And I'm confident I'm going to be showing you how to do that in today's webinar. In fact, here at VectorVest, we have an entire team of people. I didn't want you to think it was just me and Jim. I know I was wearing a red shirt. I was in that prior photo, but we are in a professional company here at VectorVest. We've been around since 1988. Right? We've been around a very long time. We've got an entire team of people here to help you become a better investor. All right, a little bit about me. I used to be a third grade teacher. That was a couple of decades ago, but some of that teaching style flows through in today's webinar. I think it really helps in this case. I do love to have fun. I love to interact during the webinar, so please feel free to type into the chat box. If I don't see your message, my team will see it, and we'll be able to write back and forth in the chat. There's going to be several times actually in today's webinar where I will ask you questions, so please type into the chat box. This is an interactive session, so please do that. You get more out of it when you do that. All right, so let's officially get in here and take a look at options. I've been working with investors, like I said, I don't think I told you. I've been here at VectorVest for 20 years or so. And over these years, not everyone has been, that I've worked with, started out as an options expert. Of course, you might be in that same boat. People with limited experience would say, I just don't know where to start. I kind of feel lost. And in the chat box, let me know if any of these ring true to you. Like, you just don't know where to start. You might feel like there's a lot of information out there. You don't know how to, what to look at first. Maybe you feel confused or intimidated because there's a lot of terms to look at. But you really want to learn options. I'm guessing that's why you are here today, because the big thing with options is you can leverage your money. Or you can get the same or even better returns by using less capital. All right. And when you're trying to grow your account for even retirement, when you're trying to grow your account, especially retirement, it becomes extremely important to be able to get more with less. So I want to show you how to do that today. Here's the agenda for today's session. All right. The first thing we're going to look at is how to filter out all the noise. That way you could start to look at what are the most important terms I need to be looking at right now. Okay. Number two, we're going to take a look at when is the best time to place option trades. When is the best time? And then third, we're going to talk about correctly setting up your option trades. All right. Now, we're not going to get into things like iron condors and butterflies and spreads. We're going to be focusing on the basics of buying calls, buying puts. We're going to talk about those today. And then we're going to take a look at what we use here at VectorVest is a 5-step option trading system. So we're going to go through those steps here today. All right. I really want you to stick to the end, because if you stick to the end, you actually learn everything. You get so much more out of the session by sticking to the end. So if you do stick to the end, I'll give you a copy of all the slides we're going to look at today, which I think will be really helpful. In the chat box, let me know if you find that helpful. Then that'll let me know hey, I could always not do this anymore. So if you find it helpful for the slides, just give me a quick yes. All right, cool. Donald Sanjay said yes. Awesome. So I'll give you, so just remind me, please remind me at the end when we start the Q&A. I usually forget, because about an hour of teaching, I usually forget about the slides. Just say, hey, Brian, don't forget the slides. And that'll remind me to put them into the handouts area. All right. So in the chat, this is one of those interactive pieces. I want to learn a little bit more about you. What's been the hardest part, or what's the hardest part for you about trading options? Just type it into the chat. I'll grab a quick drink while you do that. Donald says, I just don't know how. Liliana, you said the exact same thing. I just don't know how. Picking the expiration date, says Ricardo. Choosing the right strike price, says Selvin. I never did it and I want to learn, says Lunmaila. Mike says, what stock should pick? Being consistent, says Richard. I have no idea, says James. All the numbers that are with options, says Christian. Tigan says, I'm clueless. All right. Well, if there's one thing I want you to get out of today's session, I want you to understand that the system, your system, is the thing that's going to determine your success. And when we're talking about system, we're talking about when to be trading, what stock and what option to trade, and how to manage the trade. And when we get to the 5-step system at the end, it'll make more sense. We'll tie it all together into that system. The system is the thing that is going to make the biggest difference for you. All right. So let's look at how to focus on the most important things, because there's a lot to look at with options. Right? There's a lot of information out there. There's so many terms, right? Probability, volatility, all the Greeks, gamma, theta, delta, vega. There's all the terms like strangles, spreads, straddles, butterflies, right? There's a lot of information out there, and it just becomes overwhelming sometimes. You feel there's so much out there that really, like, maybe only the experts should be doing this. And then some of you, I think, who was it? Christian, you said all the numbers. Exactly. You go to your broker and you pull up the option chain, and this is what it looks like in most brokers. I just pulled a screenshot from one broker. This is what it looks like, and you've got all these things. Let me get my laser pointer out here. You got all these things going across the top. Like you might be familiar with bid and ask, but then you've got open interest, implied volatility, delta, all these dates going across the top. What are these strikes going down here? So it just becomes a little overwhelming. But I want to show you something here. This is something that was taught to me that really helped make things make sense. Someone sat me down and they said, you know what, Brian, there's really only a couple of things that you need to know to understand options. And I was all ears. I was like, tell me what these things are. They said, All options are made up of one of two things, or both, either calls and or puts. That's it. Even those complicated things like iron condors, right? They're all just made up of calls and puts. In addition to that, there's just going to be buyers and sellers. Those are the 4 building blocks of options. And I want you to do this. Actually draw this out on a piece of paper with me. So get out a piece of paper and draw out a 2x2 grid. And this 2x2 grid was something that I stuck on the wall by my desk. And it stayed there for, I don't know how long, years maybe. I just kept looking back at it to really have options sink into my brain. It probably doesn't take years, but it's a nice little reference. On the left-hand side, there's the 2 things. There's calls and there's puts. And there's only 2 things that you could do. You could either be a buyer of them or you could be a seller. That's it. Anytime you buy something, even if you go to Walmart right now, if you're a buyer has rights, right? You have the right to return something that's broken. You have the right to get a refund. You have the right to expect a working product. Buyers have rights, and the same is true with options. When you buy an option, you're going to have rights to do something, and we'll talk about those rights in a minute. Sellers will have obligations. Like Walmart has the obligation to deliver a working product, right? They're obligated to issue like refunds or exchanges, things like that. They're obligated to fulfill something. And the same is true with options. Sellers of options will have obligations. So now let's specifically talk about options. No more Walmart, right? Let's specifically talk about options. In this top right box, this will represent the buyer of a call. So we know that they have rights. Well, what do they have the right? They have the right to buy stock. And by the way, I like to call this adding layers to your knowledge sandwich. This is layer 1. I'm not going to throw every piece of information at you all at once. This is layer 1, and then we're going to add to it and add to it and add to it as the webinar goes on. Just know at this point that the buyer of a call has the right to buy stock, which means that the seller of that call takes on obligations to sell the stock. Okay? The buyer has the right to buy. The seller is obligated to sell. All right? You see how those kind of go together? So then down here with the buyer of a put, let me get my little mouse. There we go. Has the right to sell a stock. The seller of the put would take on obligations to buy. All right, so that's part 1. Now, the other thing that stood out to me is there's a little added piece of information that this chart will give you. I noticed that if I connected these 2 boxes with an arrow like this, it represented like a stock or the market going higher. So these 2 boxes are actually bullish trades. When you buy a call, it's a bullish trade, and when you sell a put, it's a bullish trade. Then the other 2 are bearish trades. When you sell a call, when you sell a naked call, and by the way, we don't recommend selling naked calls, but if you sell a call or you buy a put, those are bearish trades. All right, so let's get into an example. And the thing that helped me understand options is by comparing it to something that I already knew. So at first, I'm going to show you just a stock trade, and then that'll help understand an option trade right after it. So here's a graph of Apple. It doesn't matter the date, so I took the dates off, but just this could be stock XYZ. In this example, Apple's trading at 130. How much would it cost to buy 100 shares? Well, I think we know the answer to that. It would be 13,000, right? I mean, 100 times 13, or sorry, 100 times $130 a share. Let's look at a couple of scenarios. In scenario 1, if Apple dropped to 125, remember, you bought it at 130. What are your 100 shares worth now? In the chat box, let me know. This is also a part where I can make sure that you are still alive out there in webinar land. Donald, you're first. Porter, then Bob. Yes, 500. And the answer to the second question, do you have to sell? And Sanjay, you were the first one in there. You answered that one already. Sanjay says, no, you don't have to sell your shares. Remember, you're the buyer. You have the right. It's your right. You don't have to sell. You have no obligation. Dennis, you got it. Dennis, 12,500. Yeah. Next up is if Apple went up, the 100 shares are now worth more, right? Because it's 14,000. Do you have to sell your shares? The answer again is no, right? You're the buyer. So that again, we're starting off with something you already know. As the buyer of stock, you have the right to hold it if you want. There's no obligations here. Okay? So if we fill in a little table, remember, this is just buying a stock. I want to give you a lay of the land here. A lay of the land. Over on the left-hand side is the stock price. Of course, we all know that the stock could go higher and lower. I could only fit 5 rows here. All right, so we have 5 rows. This column here will be the initial cost of our 100 shares. And we said before that was 13,000. So that goes in this row here. It's the same regardless of what happens to the stock. It doesn't change the fact that you spent $13,000 when you initially bought it. So that's why this stays the same. Over in the next 2 columns, this is going to be how much cash we would get back if we sold it. Remember, we bought 100 shares of the stock. Now, if we sold it at these prices, how much we would get back. And then the next column is how much money we would have made and or lost. All right, so if Apple was still selling at $130 and we sold it, we would get back the same $13,000, right? So we would have no profit, no loss. It's a wash. And of course, if Apple goes down, we're losing money. And if Apple goes up, we make money. Dollar for dollar, right? So I didn't want to spend too much time on that part because we kind of know that, right? We've bought stock before. Here are the 2 key questions for this when you buy a stock. What's your maximum profit? Let me know in the chat. Anytime you buy a stock, what is the maximum amount of money you can make? Donald, you're first one in. Nice. You're fast on the typing today. Lisa says as much as possible. Donald had said unlimited. Then I see unlimited, unlimited. A lot of people saying unlimited. Shannon says unlimited. Yes. Unlimited, right? There's no cap. I mean, you might want to sell it, but there's no cap. What is the most you're risking on this trade? Oh, Ricardo, you're trying to win here, Ricardo. Ricardo's the first one in this time. Ricardo, Selvin, Bob, Daniel. The maximum risk. Oh, I like the way that you said it, Kevin and Christian. Kevin says your initial investment. Christian says whatever you put in. Exactly. In this example is and Dennis, you got it. 13,000. Right, so that's a stock trade. I thought it was important to start with that as a foundation before beginning to discuss options. So now let's discuss what this same trade would look like as an option trade. And specifically, we're going to be talking about buying a call. Again, here we're looking at Apple. And remember, you are still bullish on Apple. You're bullish on Apple. It's trading at 130. You want to buy the right to buy Apple at 130. Okay, you want to buy the right to buy Apple at 130. All right, again, you're not actually buying the shares of Apple. You are buying the right to buy Apple at 130. So what do? Well, you're going to buy a call option. You buy one call option on Apple. And remember, it gives you the right to buy Apple at 130. You're the buyer of a call. You have the right to buy Apple at 130. Let's add some more layers to this. Your one call gives you the right to buy 100 shares of Apple at a certain price. And in this example, our certain price was 130. Right? You could have picked whatever price, but in this example, we're picking 130 by a certain date, and that's your expiration date. We'll talk more about the expiration date later. Just like anything, when you buy something, it's going to cost you something. Your one call costs $3.65 per share. Now, since each option controls 100 shares, 100 times the 365 would be $365 for the one contract. Right? Now, this happens to be with this example. Options, just like stocks, see, all the options have different prices. They have different prices. This one happened to be $3.65 per share. All right, let's look at the same two scenarios as before. If Apple were to drop to 125, would you want to exercise your right to buy Apple at 130 if it's trading at 125? Donald, your first one in. Stephanie, Christian, Lisa, Liliana, Richard. Yeah, a whole bunch of no's, right? Why would you want to buy something at 130 if you could just go out and get it at 125? So the answer there is no. What about if Apple rose to 140? Would you want to exercise your right to buy Apple at 130 if it was trading at 140? Donald, Liliana, Atul, Tony, Nelson. I see a bunch of yeses coming in. And Larry, interesting. Larry says maybe. Well, actually, Larry, I'm going to go with yours. It was the answer is maybe. I'll say this, though. Everybody who said yes, Dennis and Shannon says maybe. You're right. I mean, you have the right. I should have said you are correct. I can't keep using the word right. You are correct. You have the right to do this, to exercise this. But the other thing you could do is you could just sell your option to someone else because it definitely is worth something to someone. All right? Yeah, and Selvin's right. You could exercise your right, but most of the time that's not done. Usually people would then take this option and sell it to somebody else at a profit. So let's understand what we're talking about here with profit and loss. Pardon me. On the left-hand side is the same thing as we looked at before, the stock's price. In this middle column is our initial cost of the option. And we said before that the initial cost of this option was $365, right? Over here, this is the option's value. I want to be clear on this table. We are now looking at the option's value at expiration. Those of you who are a little bit familiar with options know kind of what I'm getting at here, because if there's time left between now and expiration, there's a thing called time value. We're not going to get into that time value right now. We are just going to be looking at what the value of this option is at the expiration date. So on the expiration date, if Apple was trading at 130 and you had an option that gave you the right to buy Apple at 130, well, the option has no value. Thank you, Ludmila. You got it right. You got it correct, I should say. Has no value. It's like if you had a coupon, right? If you had a coupon to get a Big Mac for $5 and you walked into the restaurant and you looked up at the menu and it said Big Macs for $5, you're not going to use the coupon. You just buy it off the menu. Right? So the coupon doesn't really have any value to anybody because that's just their going rate. So that's why this is zero. So your profit and loss would be you'd lost your initial investment. And the same is true if Apple is trading lower. You would lose your initial investment in those examples. Now, if Apple went up to 135, the value of the option is $500. Why is that? Well, because Apple is now $5 higher. So somebody would have the right to buy Apple at 130. They could immediately sell it for 135. So that's a $5 benefit. $5 times the 100 shares that you're controlling is $500. Well, what's your profit and loss in that case? Well, you spent $365, so your profit and loss is $135. If Apple went up to 140, that's $10 of what's called intrinsic value. Right? Your option value would be $1,000 because anybody holding that option could immediately see a $10 benefit. So $10 times 100 shares is $1,000. Your profit would be $635. So here's the same two questions, the key questions. What's the maximum profit? What is the maximum profit when you buy an option? Donald, Selvin, you got it. David's answering both of them. David wanted to be first in on the second one. Yeah, the first one is unlimited. And here's a cool thing. What's the maximum risk? 365. Isn't that a big difference from 20, what was it, 13,000? Yeah, Dennis, you got it. Well, let's take a look. Here's how it played out. On February 6th, Apple was actually trading of that year. I don't have the years on there, but of that year, it's trading at 129.73. Pardon me. Sure, you could have bought Apple, right? We already talked about that. You could have bought Apple. You could have bought the stock. It looked good, right? I mean, look at this. Stock's going up. It gapped up and it continued to run. So if you did buy the shares, about a month later, it was up at 139, and that's a 7.7% increase. Sounds good, right? If you bought a stock and you were up 7.7% in a month, you'd probably be happy. It's a nice gain. It's a really nice gain in a month, right? Well, let's fill in our table again. So if you bought 100 shares of Apple, it would have cost you $12,973. On March 1st, the value was $13,979. So if you sold your 100 shares, you would have made a $1,000 profit. That's your 7.7% increase, right? Yay! That's good. Sorry, I didn't mean that. Hopefully I didn't clap right in the microphone. But that's good. Now let's look at the option. If you had just done one option contract, let's say you were bullish on Apple at the time, you did one contract on Apple, cost you $365. March 1st, the value of your option was $1,080. That is a net profit of $715, a 195% return on what you risked. Just wanted to pause there for just a minute. Right? Let me ask you a question. Can you give me some leeway here that the 700 is pretty close to the 1,000, right? In the grand scheme of things, 700 is close to the 1,000. All right. So if you, instead of buying 100 shares of Apple and risking almost $13,000 to make $1,000, if you bought one option contract, it only cost you $365. That's the most you could lose. You just made $700. A 195% return on your money. Ricardo, you got it right. You got where I'm going. If you did more contracts, 3 contracts, it still only cost you $1,000, $1,095, and you made $2,000. Still 195% return, but since you're investing more, you're seeing more profit. Now, let me also ask you this. Would you say that a common stop that people use on their stock trades is like a 10% trail? A 10% trailing stop? So let me get my pen. If you did a 10% trailing stop and you bought and you did this trade, you'd be willing to lose $1,297, right? If that stock went against you 10%, you just lost $1,297. And you'd probably be like, oh man, a losing trade, I'm going to move on. Well, guess what? If you're willing to lose $1,297, that's why a lot of people say, well, I'll just do options. Because the most I can lose on this is $1,000. And look, I made double what I would do in this stock trade. And by the way that we teach options, we actually have a full, like a 6-week course getting into the nitty gritty details of all this. It's also called the Options JumpStarter, but it's a 6-week course. And Jim Penna and I and Ron Wheeler, the way that we teach is you're never going to lose the max. We have specific rules on that. We just didn't have time to get into that right now. But you could also do 10 contracts. You could start to see the leverage here. You're only risking $3,600 to make $7,000. I want to ask you this question. If you had this working for you, what would be the impact? And I want to phrase it this way. I hope you're not here in today's webinar thinking that we want you to become just full-time option traders. But let me go back to this other slide. You remember earlier my promise to you was that you could use options to possibly double your annual returns? Do you remember that? What if you're still buying and selling stocks, but every once in a while you see an opportunity and you say, "Well, I'm not going to do this time. I'm going to do the option trade and I'm going to replace it with this." So, and you just sprinkle these in. Maybe instead of 1,000, you sprinkle in a 2. Maybe instead of 1,000, maybe that time you sprinkle in a 7. What would be the impact for you if you start to sprinkle in and these making these exchanges, let's say? Tony says life-changing. Bigger gain, says John. Life-changing is right, says Ricardo. Yeah, I mean, it helps you grow your account faster. And things like that can definitely change your life. So the strategic shift, the first strategic shift, and that's one of my jobs today, is to help you see, to make some shifts. The first strategic shift is to go from just trading stocks to where you leverage with options. You start to sprinkle in some option trades. So that's choice number in the chat. Let me know. Do you want to, if you could either say, Brian, I just want to do stocks, or you can type in the chat box, just say options. And if you type in the word options, it just means that you want to sprinkle in some option trades. Selvin, Liliana, Bob, Tony, Ricardo. Exactly. You just sprinkle them in. Okay? And remember, my promise to you was that you can learn how to use options to double your annual returns. Using the leverage of options is a key component of doing that. All right, part 2. That first part takes the longest because I really want to start with a strong foundation. Part 2, now let's get into how to align your trades. You've got to start to learn how to trade these correctly. Because a lot of times people see these big numbers. They see like, oh, wow, $7,000. And they just go out there and they just buy options anytime. They won't pay attention to when. They'll just go out there and buy an option. Instead of doing it that way, you need to align your trades to give yourself a high chance for success. Remember, this is another look at Apple. So you know that buying a call based on our chart from before, it's best when you think the stock is going up. Well, this is a graph of Apple at a different time period. The stock was rising, right? The stock is going up. It started to go above prior resistance. So you're like, oh man, I'm bullish on this thing. I'm going to buy an option. But the stock moves lower. And when things like this happen, it starts to get frustrating, right? Because you think you're doing things right. You're buying a call on a stock that's going higher, but it doesn't work out. It starts to get frustrating. But we got to talk about why it's happening. I want you to look at the time period here. That's about October of 2018 of that year. Let's take a look at what the market was doing. Here's October of 2018 of that year. And you could see what was going on in the market. Well, the market had peaked back here in January of that year. It was starting to recover, but you could see it hit the same area of resistance. It was actually hitting a lower high. Our market signals were starting to turn down. And when things like this occur, look, the market starts to come down. And when you don't pay attention to the market's direction, trades, especially option trades, more times than not won't work out because option trades, remember, have an expiration date. Pardon me. So you want to give yourself an opportunity for some explosive gains. And to do that, we do a thing called the match game, where we are going to match up the market to the stock to the option trade. So in our example that we're going to take a look at here, we're going to look for the market going up, the stock going up, and in our example, a bullish option trade would be a thing. We're talking specifically about buying a call. But as you start to learn more and more about options, you could start to replace this buying a call with things like a bull put spread or other bullish option trades. Right? We want to look for a match in all three. The market has phases. The best phase and the best time to buy a call is in what we call the explosive phase. Now, some of you actually have learned from VectorVest before. Some of you are here for the first time. In the chat, let me know. Are you kind of new with VectorVest? Are you like a first-time listener to our training? Just let me and my team know that you're kind of like a first-time listener. All right, Liliana, Steven, Larry, Lunmaya. And there's a bunch of you who are also saying, hey, I've been here a while. So a bunch of new people. The reason I ask is because this past Friday, Steve Chappell, one of our other instructors, put out a video, and so did Glenn Tompkins on our YouTube channel, I believe, talking about the explosive phase of the market. Because, like, right now is around that time when our indicators are getting low. So you're watching this webinar at an ideal time, because the best time to buy a call is when the market is exploding off a bottom. That's what we call the explosive phase. During this phase, the market moves up quickly because it's like a rubber band. You pull, it snaps back quickly. And then after that explosive phase, then we get into more of a trending phase, then a topping phase. All right, we don't have time to get into all the different phases right now, but just understand there's the explosive phase, and that phase is the best. Here's Apple again. Now you could see the same type of thing with Apple. Here we have, I want you to take a look at Apple and look at a couple of time periods. Here we have, this would be January of 2019, where it bottomed and started going up. And here, this was the COVID drop, right? And here's around late March, around April. I want you to take a look at our market timing signals over here. And the tool I use, which I just gave it away, I use a tool called VectorVest. And some of you use this in the room. One of the signals that we have in VectorVest is a signal called the buy to sell ratio. When it gets down below a level of 0.2, which it did just a couple of days ago, and it starts to move back up, it typically tells you the market was oversold and it's most likely entering an explosive phase. And we could see that here. You see around that time of January of that year, we were down below, seeing the indicator come back up. Explosive phase. Below 0.2, starting to come back up into the explosive phase. So if we look back at Apple, right, here's Apple again. We're saying instead of buying here, the best time to buy a call is when the signals tell you the market is exploding off a bottom. All right, so we're remember the whole point of this section is we're matching the phase. We're doing the match game. Okay, this is an example. Here's what would have happened if you bought on October 3rd. You would have spent over $1,200 on your call, and since the market moved against you, some people who don't know how to trade options the right way yet, they let their options expire and they actually suffer the full loss. But what if you did it right? What if you played the match game, matched everything up? You would have ended with a $3,100 gain. But I want you to take a look at this. After just a couple of weeks into this trade, right? You entered it here. After just a couple of weeks in this trade, you're already up around $1,500 to $2,000. That's over 50% of your investment. If you had a stock trade and you just made 50% in a couple of weeks, would you be happy? Exactly. Right? It's a huge difference when you start to align your trades. So when you have an indicator and tools and you have the know-how to do the match game, does that start to give you a competitive advantage? Like you've got some other people out there who are just buying calls anytime. But you're here saying, well, what's the most opportune time? I'm going to wait for the market to explode. Right? I'm going to look for a stock, a good stock, the right stock. Right? You start to play the match game. Does that give you a competitive advantage? Definitely, says Liliana. Exactly. So the second shift is the shift from buying any old time to where you're aligning your trades. So in the chat box, let me know. Donald just typed in. He's like, absolutely gives me an advantage. In the chat box, let me know. Do you want to do anytime or align? Anytime or align? Ludmila says align. Bob, align. John, Andrew, Ricardo, Sanjay, Liliana, Richard, Kevin, James, Daniel, Donald, all say align. Yeah, Donald, align. Dennis, align. We want to align our trades. By aligning your trades and placing them at the right time, you give yourself the highest chance for success. And you allow yourself to take advantage of the leverage that we talked about earlier. Right? Remember, not every trade's going to work out. And hopefully you're not listening to this webinar thinking, oh, this is a foolproof system where every trade is going to be, I'm going to make 3,000%. No, there's going to be losing trades. But the key is we want to give ourselves the highest probability for success and to manage these trades the right way. So how do we start to do that? Well, we're going to set them up the right way. Because now that you know that you want to start using options and you want to align your trades, you've got to know how to set up the trade correctly. Because a lot of people learn the basics of what a call is and what a put is, but they don't pick the right strike. They don't pick the right expiration. So you want to start to plan things out in advance. Like a chess player, they plan things out, moves in advance. For example, here's an example of just Home Depot. It's a nice looking chart. Instead of using Apple, I wanted to use a different stock. Stock's going up. Pardon me. And on March 1st, what a lot of people do who don't know how to trade options the right way, what a lot of people do is they buy a call, but they set the strike in the wrong spot. Right? They don't set the strike in the right spot. They pick a strike way up here where this line is. Let's say 155. And remember, it gives the buyer of the call the right to buy Home Depot at 155. And why are they buying this option? Well, because it's so cheap. It's only costing them $47 per contract. It's super cheap. Like, $47. I'll just do it. But what are the chances that Home Depot is going to get above 155, especially considering that there's an expiration date looming? It's got to do it before an expiration date hits. Typically what happens to people who don't pick the right strike or expiration is the stock might actually go, look, this one actually went up a little bit, but it doesn't go up enough. And the option ends up expiring worthless. And these people who say, oh, it's only $47, it's like you take these small loss, a small loss, and small loss, and eventually it's like you're getting jabbed. Jab, or death by 1,000 paper cuts. Eventually you get knocked out and you bleed your portfolio to death. Instead, we want to put probability on our side. And it's done by setting up the trade the right way from the beginning. Let's look at the two core problems and how to solve the two core problems. The first one involves a thing called time decay. So here is what you see here is what happens to the price of an option in relation to the number of days. Let me get my laser pointer back out. Down along the bottom is the number of days. And this is just looking at time. There's like nothing else. It's not looking at the stock's price. It's not looking at volatility or whatever. This is just looking at as time goes by, what happens to the value of your option? Well, you can see as time goes by, it's a depreciating asset. Time is just eating away little bit by little bit in the value of your option. And then in the last little bit, it really ramps up. It took 135 days for you to lose half of the value of the option, and then only 45 days to lose the rest. Now, some people, if you're new to options, you're like, what are you talking about, time decay? Just think about it like if you had milk or steak on at the grocery store. That's a depreciating asset as well. If you got milk or steak, as the expiration date gets closer, they start to put it on sale, right? It's going to become cheaper. So is your option as it gets closer and closer to expiration. So here's a look at Home Depot again. Most people choose an expiration date here or here. And I overlaid the depreciation. It's like trying to swim with a cinder block tied to your ankles. The stock is trying to go higher, but the time decay is pulling it down at the same time. So you want to give yourself enough time to be right. So you are not going to be buying options with an expiration date in the last 45 days. We shoot for longer than that. The second problem involves where people pick their strike. They set their strike so far away and it has little chance of ever getting hit. Why? Because again, calls are cheaper the higher you go and the farther away that you get. But probability also decreases the higher you go with your strike. It ends up being like a lottery ticket. People are like, oh, I'm just going to spend $47 and I'm going to strike it rich. But most of the time you lose the lottery, right? Same thing as with options. You keep buying these cheap options, you're losing and you're losing and you're losing and losing. And you basically are like, oh, I never win these things. There's a reason they're cheap. Let's look at how to do things the right way. Here's scenario number 1. This is what it looks like doing it the wrong way, and the next one will be looking at it doing it the right way. So scenario number 1, again with Home Depot, is when somebody put their strike way up at 155, and the expiration date was in April of that year. So it's just what? March, April, 1 month away. The end result was they lost their investment, $460. All right, you see that over here, $460. Well, what if you gave yourself more time? Same stock, same exact stock, except you're still trading right here, but you're giving yourself more time. By giving yourself more time, you choose like an expiration date out in May, so you give yourself a whole nother month. And instead of choosing a strike price way up here, you're choosing a more realistic strike price right around where the stock was when you placed the trade. The option will cost a little bit more, right? It's not a lottery ticket anymore. It's more like an investment. But the end result is a 158% return on your investment, $8,150. So you stacked probability of success in your favor, right? End result, huge gain. So what was most valuable there? I can just ask you, have you ever done these trades wrong with expiration and strike? Have you ever done the lottery ticket type thing? I shouldn't ask you so many different questions, right? Larry's like, unfortunately, yes. Porter says yes to the lottery. Yeah. Now, if you've never traded options, perfect. You're in the right spot. That way you're learning how to avoid those mistakes. The key here is to shift from just trading options and not having any rules. Is you want to have rules in place saying, all right, I want to pick this strike and this expiration. Today we were looking a lot at, don't pick this expiration in this window. Pick longer than that. Now, you can go as long as you want, but if we had more time, we would focus on let's just say 60 to 90 days in that window. It's just going to get more expensive if you choose things called leaps, right? But by setting up trades the right way, you increase your chance for success. All right, today has been all about building your option trading system to possibly double your returns, right? I want to share with you how the best option traders build their system. This is actually what we do here at VectorVest. We have a 5-step system. It builds on each other as we go, so you can take notes as we go. You notice one of the first things that we're going to look at is market direction. Remember, we got to match the phase. So at the top of the system is going to be your market direction. And a lot of traders do ignore this, and they just go out and place trades. But as you saw today, aligning your trades is extremely important. So you must have a way to know the market's direction and when the market is exploding, right? Exploding off bottoms and tops. Now, some people use things like moving averages on the S&P. They might use things like the stochastic oscillator or RSI to try and determine these overbought and oversold indications. But here at VectorVest, I showed you one of the things that we do. We have certain signals that we look at. We have the buy to sell ratio, but then we also combine that with things like green lights to start to get our initial indication to get in. Now, after you know the market's direction, then you want to start to look for stocks. You want a way to find stocks that are highly likely to move in the same direction as the market and have that a chance for an explosive move. Just trading stocks you know about or listening to those gurus on TV is not the best choice for this. So what you want to do is find good stocks that are already in uptrends when the market is rising, and you want to find bad stocks that are in downtrends when the market is falling. But we also want to have a way to find stocks that might have been beaten down, likely to bounce back up. Just like I showed you with Apple. It was a good stock, but it had gotten beaten down, ready to explode back up. Now, once you have your list of stocks, you want a way to select the best ones for option trading and the best option trade. Right? Yes, you're going to pick a call or a put, right? But you also want to have a way to look at things like volume, open interest. We didn't have time to get into all those things today. Then after option selection, then it's setting up the trade. We talked a little bit about that today, right? We looked at things like strike and expiration, but you want to pick the one that has a high probability of success. So you want to set the trade up so you have the best possible risk to reward ratio, right? That way you're not doing, oh, I'm going to risk a little bit to gain a lot, but that's a lottery ticket. There's got to be a balance of probability as well. So you want to balance things with risk and reward. So you need rules in place and an easy way to pick the correct strikes, the correct expiration, and to give you the highest probability for success. And this next part is where a lot of people fail. That's the management. Right? It's where you are going to have a plan in place to manage a trade after you've entered it. This means before you place the trade, you want to know what you're going to do if the trade goes for you or against you. Specific rules in place. All right, the first thing I want you to do. So these are 5 steps. I want you to grade yourself. Take out your pen. I'll get my pen here. Grade yourself on, all right, do you have a way to determine those explosive phases? If so, give yourself a check or a star or whatever. I'll just do checks. If you're not super confident on something, for example, if you're not quite sure how to manage the trade once you're in it, maybe give yourself an X. How's an X? I'll do checks and X's. Don't overthink it. You have 10 seconds. Go. All right, what did you just learn about the system that you have? How many checks do you have from top to bottom? You can say I'm 5 out of 5. I'm 4 out of 5. I'm 3 out of 5. 2 out of 5. 1 out of 5. Ricardo says 2. I'm just read the numbers. 2, 3 checks. 3. I'm struggling. 3, 2, 4, 2, 4. All right. So one of the things that our advice would be, let's say you had 2 checks or 3 checks and then 2 X's. Well, we'd say pretty much you know where to start, right? You would start here and fill everything in down going to the bottom, because the goal is to have checks all the way down. Then you have a complete system. So now you've kind of identified where your pain points are. Now, looking at the clock, I don't know exactly why you showed up. I'm going to make some guesses, right? Maybe you didn't know where to start. Right? Because you know that options can help increase your returns, but maybe you didn't quite know where to start. Maybe you felt confused or intimidated by all the terms. Maybe you have taken loss after loss, like that we talked about here today. But you know options can help you leverage your money and grow your portfolio at a faster pace. Now, wherever you showed up, I hope you see that your system is the thing that determines your success. And today we looked at, I hope you saw that it is possible to grow your portfolio much faster if instead of just buying stocks, you started adding in some options, which is why a bunch of you said that you want to start to leverage with options. I hope you also saw that it's possible to make money with options and see explosive gains by aligning your trades, by doing that match game that we talked about. And number 3, how you can eliminate those constant small losses which bleed your portfolio if you use rules to set up your trade, giving you a high probability of winning. So quickly, let me ask you here, do you see how powerful options can be for you when done right? Wow, a whole bunch of yeses coming in. Yes, yes, sure, yes, without a doubt, says Bob. And one of my promises that at least I made internally with myself is I wanted to give you everything I could during the hour that we had today. And at the end here, I want to show you where you can go to get more help and get results faster. I did mention this earlier, so it's probably not a surprise. I told you some people were asking about that course earlier. But you might be saying, all right, well, how I want to implement this, but I want to get results quickly. Right? Well, I mean, you do have a choice. I mean, you could choose to do it alone. I mean, it might take a little bit longer to do it alone. I mean, you could go out there, do a bunch of research, put in a lot of time and energy, researching how to do it. And maybe you might continue to see the same results that you're getting right now, but it was the downside is you learn by trial and error. And you could make the same mistakes you've always been making. Or you could do it fast and use a system that's been proven to work so that you can bypass years of trial and error that I know I had to go through and a bunch of clients had to go through before they came to us. So here's the thing. I want you to get results quickly, and that's why we put together the Options JumpStarter course. Like I said before, I said like many minutes ago, it's a 6-week course. Myself, Jim Penna. Jim Penna is the lead coach on this. You got a great coach here. We got together with Ron Wheeler, Dr. DeLito, and put together the Options JumpStarter course. It is a complete step-by-step system that shows you how to buy calls, buy puts, to profit in both up and down markets. We take you by the hand. We show you exactly the step-by-step system that you need so you can leverage your money. The outcome is you'll be able to confidently find, set up, and manage the right option trade at the right time to make money, whether the market's going up or down. And so if you're new to options or you've struggled with them in the past, this is the course for you. We put this course together for people who want a system to trade options the right way. We had a gentleman named Roger. He was in that same exact position. You can see up here, he said, I recently quasi-retired. Having left my company after 24 years, I took this course to learn basic strategies to reduce risk and gain better odds for success, and I loved it. If you're like me and you've never traded options before, I would stress that you should not make a move until you've completed this course. Emotionally, I'd say that when I do enter my trades, I do so with much more confidence. Psychologically, I feel the outcome of my trades will be positive and I'll be making money, and that puts me in a great psychological state, as I know options do not have to be a gamble. All right? Let me just map it out for you. First module, we have a module called the Option Foundation Builder. It's really important because a lot of people try to learn options and they get frustrated by all those terms and focus on the wrong things. The outcome from module 1 is you get complete clarity on how options work. You get a clear and easy to understand framework. You're going to know how calls work, how puts work, what terms to pay attention to, which ones to ignore. That's going to make it so that you don't have to waste any time. Then module 2 is the trade setup for calls specifically. That's where we're going to show you how to generate profits in up markets. Because you want to take advantage of those explosive up moves because they could really make your year. And we were talking about how now could be the perfect time for that. Right? The outcome of this module is you'll learn the exact signals to look for to identify market blast-offs, so you know when is the best time to trade calls. You'll also have the exact rules for successful trade setups. Then we flip things around in module 3 and talk about puts. Because during down markets, a lot of people get frustrated or even angry because their portfolio stalls or they give back gains. The outcome from module 3 is you're going to fully understand the trade to use to take advantage of those down markets. Then module 4 is all about trade selection. You're going to see how to quickly identify the best stocks for your trades, both bullish and bearish, how to match them to the market to put probability in your favor. All right, and then module 5 is all about trade management. A lot of you said that that's where you're getting your X's. You've got to prepare yourself for what could happen after you place your trade. It's important because you don't want to be that quote-unquote deer in the headlight. You need to know... You need to know exactly what you will do before the situation arises. Okay? The outcome from this is you're going to have a game plan in place. All right? All right. For some reason, my screen froze on my end. I just need to know. Jim Penna, can you let me know if it's still coming through? Do you see a sign that says covered calls for income?
I do, Brian. It did blank out for a second, but I'm showing it now.
All right, perfect. So this is one of the bonus modules that you get. Covered calls for income. It's one of the most important option trades every retiree must know. It's one of the ones that Jim uses in his retirement. So the outcome you get from this bonus module is you're going to know the best time to trade covered calls, how to set them up, how to manage those trades. All right, and then you can see, whoops, Doug here. Oh, let me go back to Doug. There you go. Doug, after taking the course, Doug had said he wished he had taken the course 20 years ago, because it gives the basics of puts and calls with some simple rules and strategies that you can understand and implement very easily. All right, the bonus session on covered calls alone, he said, makes the course worth it. All right. In addition, if you currently don't have VectorVest, we want to make sure that you have access to it during the course. So you're going to get 60 days of access to this tool. Plus, one of our favorite parts is the mastery sessions. You're going to get 6 live mastery support sessions with us. Think of them like implementation sessions. All right, we'll look at the things that you're doing and the questions that you have and guide you. We'll be there to coach you through the entire process. Now, if you can't make it to those sessions, no problem. You'll be able to submit your questions ahead of time via email. All right, so we'll be there each week with you live. Tough to say, the tongue twister there. All right, so here's a look at everything that you get. With the course, total value over $2,000. All right, we have a couple of options for you. We've got the self-study package and the mastery package. The mastery package is the one that includes all the mastery sessions. All right, the special, if you order before the end of today's webinar, you can get the mastery package for the same price as the self-study. Again, we're going to put this link into the chat for you, vectorvest.com/jumpstart. All right, vectorvest.com/jumpstart is we'll put that in the chat for you. Just click on that. And if you go to that page, you'll notice that the mastery package is only $295. It's the same price. And complete money back guarantee. All right, complete money back guarantee. If you can go through the entire course, and if you're like, you know what, it didn't work for me, or I don't think you taught me anything, we'd be super surprised. We'd be super surprised if that was the case. But we'd give you your money back. It's rare that happens, but it's a 100% money back guarantee. All right. In fact, we had David here write to us, and David said, you can see there, the Options JumpStarter was the perfect course for the beginner. It taught me all the basics that I was looking for. Great staff, great course. Financially, I'm up $100,000, tenfold compared to buying and holding stock in a very short time. Leverage is wonderful. I'd recommend this course for everyone that wants to live comfortably or have the ability to retire. This course and VectorVest are a blessing. Now, of course, we can't guarantee that you're going to make $100,000 like David did, but you can see it is possible. All right. Just ask yourself, how much is it costing you not to do this? Like, how much are you giving up by not doing this? Right. And ask yourself, what if I did this and it worked? Right? What if I did this and it worked? So again, go to vectorvest.com/jumpstart. You can get the mastery package for the same price as the self-study. Is a no-brainer, as I would say. Just go to vectorvest.com/jumpstart. Register today. The price goes up on Monday. All right, so that special deal that I just showed you right here of $295 for the mastery package is only available while we're live on the webinar. So you got to go there now to get that. Otherwise, it goes to $495. And then the price actually goes up on Monday. All right. So with that, in the chat box, if you're in, just type in 2 words, I'm in. 2 words, I'm in. And I'm seeing some people in the chat box saying, Brian, don't forget the slides. Give me a second. I will put them in the handouts of GoToWebinar. One of the benefits of doing that. They're uploading now to GoToWebinar. There you go. I think it was Liliana. So I'm seeing I'm in from Liliana, Steven, Nelson, I'm in, Daniel, I'm in, Ludmila, Gaboyega, Joyce, Investor, George, Mike, Richard. Yes. Oh, you could definitely register tomorrow if you want. It's just we like to get, since you're here today, a deal if you order since you're in on the webinar. The self-study is always $295, right? Well, I shouldn't say it's always $295. Sometimes it's $495, which it'll go up to on Monday. But right now the self-study is $295, but you might as well do the mastery package because the mastery package is the same price. So to give you an idea, you're going to go to, if you go to that link that John or Jim put into the chat box, you'll see a page that looks like this. And if you click the register today button at the top, you come down, you can see where it says mastery package, best value, $295 webinar special. And when you click on mastery package registration, it brings you to a page where it says $295 and you could click on the purchase course now button. All right. So with that, let me take a look at some of the questions. I see, the first question I saw was, when does it start? That's from Edward. I actually put together a slide for that. Thank you, Edward, for that question. You kind of led right into my next slide. The live sessions will be on Wednesdays. Live sessions on Wednesdays, and you can see I circled them all on the screen there. They span 3 different months. So they start, the first live session will be December 22nd, and it's just every Wednesday after that. And there's the bonus module is there on February 2nd as well. That's the one on covered calls. All right. Thank you for that question there, Edward. Porter says, I'm looking forward to it. I just bought it. Tim says, I'm in. John says, I'm in. All right. Now, the question is, do you have to attend the live sessions? You don't have to. I think there's a lot of benefit there, but we'll give you the recordings of all those sessions inside of the VectorVest University. Dimka says, what time are the live sessions? Those sessions, I think, did I not put 11 a.m. Eastern time? So I can't do the conversion to Belgium time. Edward says, does it require the use of the Options Pro software? No, it does not. You can do all the stuff. I mean, we'll show you how to use the base VectorVest software to help you get better results. But all the things that you could do, you could actually just pull up a broker. Bob, the 60 days of access, I believe, is for the 15-minute delayed version of VectorVest. The enhanced version, I believe it's called. Alan, yeah. Oh, great question. Says, can we get immediate access? Yes, actually, as soon as you sign up, you should get an email from us that says, welcome. All right. So in that email, it'll have the directions to access the course. So yes, you should be able to get immediate access. And you could start, I really appreciate you asking that. You can start going through the course right now. Even though the first live session is December 22nd, you can go through all of the training right now. You can spend the next 2 days or tonight if you have a bunch of hours, but you can go in and start going through all the material, because now, looking at our indicators, we were down below that buy to sell ratio below 0.2. So get in there, start learning about it right now. Great question. Andrew, yes, but I don't know the dates and the times. It could be sometime later, a few months down the road. Let's see. It doesn't show your name. It just says investor. You can check the VectorVest.com site for pricing of VectorVest. It could be as low as you can have the VectorVest mobile. I don't even know the price of those, but the VectorVest is like $69 a month for the end of day version. Harry, after the 60 days, it's up to you. If you want to continue using VectorVest, just give us a call. We'd be happy to continue on. It wouldn't automatically continue for you. You're welcome, Alan. Todd, I don't know if that's a possibility. Todd, just have to give our team a call. Peter says, how long is each session? Each of the modules is about an hour long. And there's like, what is there, 6 modules? And then the mastery sessions last about an hour. Usually. It depends on how many questions come in. John says, do you have to buy the stock first? No, you're not going to do any stock trades. If you're doing this, we're going to remember we're going to replace a stock trade with an option trade. So instead of buying the shares of Apple, let's say, you would buy a call on Apple. So you're not going to buy stock with this. Sujit says, I just purchased. Awesome. Welcome aboard. Tim says, I'm trying to register, but I can't access it. Oh, no. That's something I can't fix, Tim, on a webinar like this. I would say you could always, I'm going to put our phone number in the chat here. It's 888-658-7638. 888-658-7638. And somebody, just give our team a call. They should be able to help you out. Andrew, VectorVest intraday. Yes. If I remember the website, that is what it is. Now, if you currently have VectorVest right now, then you would just continue with your subscription during the course. If you do not currently have VectorVest, that's where it would give the access to VectorVest during the course. It's kind of like a trial to VectorVest. And those of you who are subscribers, hopefully you'll understand that, because most likely when you first started with VectorVest, you had a 5-week trial or whatever for either $9.95 or 99 cents or something like that. This is our way of giving a trial to somebody they're spending $295. So it's like a $295 trial, whereas you had like a 99 cent or a $9.95 trial. Larry says, I just purchased. Liliana says, I'm registered. Awesome. John says, I'm in. Dimka, I'm not sure what your question is about the bonus modules. If you could rephrase it, I could help you out. Lisa, the way the system works is the 60-day access to the software starts when, like right now, as soon as it goes through, or in a couple days, something like that. Joe, that you say any discounts for current VectorVest users? This is the lowest price, the $295, if you order before the end of the webinar. Now, we do have elite pricing, but that's half off the regular rate. And all I know is that this $295 is lower than any of those things. Andrew says, I look forward to attending the course. Liliana says, when is the first live session? The first live session is December 22nd. Because we wanted to give you some time to go through the recorded material, write down your questions, and then that'll give you time to do that and bring your questions to the live mastery session. Yes, Larry says, will I be able to print a hard copy of the course? Yeah, you have access to all the slides. Michael says, I'm in. Robert says, can I do it on my tablet? Tricky question, because, you could watch all the material on your tablet. You could go through all the webinars on your tablet. We'll show you how, all the things you could do with your broker. Your broker probably has an app, and even VectorVest has an app. There's some pieces of VectorVest that it might be might look better on the desktop version. I'm going to say you should be able to accomplish things with a tablet. Yeah. Michael says I'm in. Christian says, do you guys know how to operate in a bear market as well as a bull market? Yep, that's part of the course. That, module 2 is talking about calls. Module 3 is about puts. Now, if you're talking high level, like bull versus bear market, we've been in an extended bull market for a while. But if you think about it, in a bear market, you're still going to have downturns and upturns. It's just that the downturns usually last longer and the upturns are quicker. So what we're going to teach you in this course, you'll still be able to apply in a bear market when it comes. Sohail says, I just paid for it. Welcome aboard, Sohail. Mark says, I'm in and I'm signed up. Tim says, I'm holding on the phone, waiting to place the order. Hey, Tim, what place are you, like, second in line? He usually says, hey, you're number 3. Grial says, I am in. Welcome to you. Tony says, I'm finally in. Welcome to all of you. All right, well, we usually leave the 295. We give it like 15 minutes or so before that turns off. That way, if you're on hold, you'll still be able to place your order. Joyce, like Joyce says, I just have to call support. Mordecai says, you don't work with Ameritrade? I signed up. I thought when I first read that, I thought you don't work for Ameritrade. No, I don't work for Ameritrade. I happen to use this Thinkorswim software myself, but VectorVest doesn't tie in with Ameritrade. For some reason, I assume that there's no agreement between the two companies to tie in together. Tony says, I'm in the UK. Can I still use this course? Yes. In the UK, the most liquid option market is the US market, though. And so if you're going to be trading the second most liquid is typically the Canadian market. So what we're going to teach you how to trade options the right way, regardless of the options market. But the most liquid and the most heavily traded is the U.S. market. So most option traders will do their option trades on the U.S. market. Sujit says, does it start the same time as this session? No, this session started at, noon Eastern time. So 1 hour prior to whatever time you listed, Sujit. So if you're saying it was 9 p.m. for you, it would be 8. No, I can't account for if you have any kind of daylight savings time or anything. Our time already changed, so it shouldn't be an issue. Yeah, so Todd, I don't know the answer. I can't answer that. That'd be something that when you call our team and ask, they'd have to check with somebody. Joe, we're going to try our best. I was having some technical issues on my end as far as the recording goes, but we will do our best, Joe. You're welcome, Alan. And with that, everybody, I think what we'll do when we start to wrap things up, if you do have questions, we put our phone number in the chat, 888-658-7638. Give our team a call or go to VectorVest.com/jumpstart. There's a lot of details there. And Tony, I see your question. When does the course start? Well, you can access the course materials immediately. So for you, the course could start right away and you can start going through all the material. Jim's first live session with you will be December 22nd. Liliana, I love your positive attitude. Hopefully you continue to bring that into the course. Liliana says, thank you. I'm looking forward to learning all about options. Awesome. We look forward to having you in the course. Go to VectorVest.com/jumpstart and we will see you at the first live session. Bye, everybody.